Summer's the season for healthy outdoor activity. Whether you're hiking the Forest Park trails in Portland, enjoying a bike ride through the city's vibrant neighborhoods, or just playing pickleball at a local court, you're probably spending more time than usual in the sun, moving, getting your steps in, and burning calories. Natural sunlight means less time under blue-rich LED and fluorescent light, which have been linked to obesity, diabetes, heart disease, and even endocrine-sensitive cancers. But summer's almost over. It ended on Sunday, September 22nd. It's Taylor Swift watches football season now, and with the days growing shorter, it's going to be harder to keep yourself healthy in the rainy Pacific Northwest. Obviously, Uncle Sam wants you healthy. For fiscal year 2022, Washington lost $187 billion in revenue by not taxing employer-provided medical insurance and premiums and medical care. Premium tax credits cost another $76 billion, while HSA contributions cost another $11 billion. Finally, individual taxpayers saved $10 billion by itemizing medical deductions. That's a real commitment. But there's a funny quirk in how the tax code looks at those sorts of expenses. Section 213 provides that there shall be allowed as a deduction the expenses paid during the taxable year not compensated by insurance or otherwise for medical care of the taxpayer, his spouse, or a dependent, to the extent that such expenses exceed 7.5% of adjusted gross income. At the same time, the code disallows deductions for wellness expenses, which are merely beneficial to general health. That literally makes no sense. Why disallow the small expenses we pay to head off the far greater amounts it costs us to be sick? Leo Sofsky is a professor at the University of North Carolina School of Law. She's written a paper for the upcoming Georgia Law Review, challenging this seeming glitch in the healthcare pricing matrix. She recognizes that the code's definition of medical care originated decades ago when there was little or no concept of wellness as we understand it today. She acknowledges the traditional justification that medical care is different from consumption. It's subsidizing compulsory expenses in order to restore a loss. And she argues the new science around wellness reveals that much of those new expenses constitute medical care too. Sofsky proposes 3 paths to reconcile the tax code's inconsistency. First, we could expand medical subsidies to include more expenses to prevent disease. Second, we could shrink our current medical subsidies to limit them to truly catastrophic and compulsory expenses. Or third, her proposed solution, we could offer taxpayers a progressive credit for wellness expenses. Of course, whenever you hear the word tax, the devil is in the details. No one would deny that a gym membership is a core wellness expense, but does Uncle Sam want to subsidize sceney urban wellness resorts with bars and pickup scenes? The IRS currently maintains 27 employee gyms at their facilities across the country. Maybe we should make those gyms the standard. What about wearables like Fitbits, Apple Watches, and $900 Gucci-branded sleep tracking rings? Where do you draw the line on out-there expenses like biohacking to prevent age-related degeneration, genetic testing, and cryotherapy baths? Is Oprah going to come out and say, "You get a Peloton, and you get a Peloton, and you get a Peloton"? Sofsky's proposed progressive credit would ensure billionaires don't shift the cost of their ayahuasca retreats to the general public. But pushing that sort of initiative through today's divided Congress in the face of a $35 trillion national debt would require superhuman strength and training. So remember, while we're waiting for a superhero to rationalize wellness deductions, David Tuck, a trusted Portland tax consultant, are here to help you make the most of your current opportunities, whether they come from HSAs, MERPs, or any other place in the code. For those of you in Portland, Oregon, reach out to Anvil Tax Inc. for expert tax planning that focuses on maximizing deductions and protecting your financial health right here in the Portland metro area. Contact David and schedule a right fit call by visiting www.anviltax.com. Thank you for watching.